So it's going to be about the needs are more taken care of, and now folks are going to be able to spend more on the wants, I guess.
That's right. This year and since really 2022, where we've seen particularly the essentials costs rising so much more than the average CPI, of course you would have ended up seeing the increase in the share of wallet that consumers have been ending up spending on essentials, even while they're trying to prioritize particularly the out and about categories, for example, of travel and eating out. And in fact, in most places, we've seen the food categories, whether it's on groceries or indeed on dining out or ordering in, they've been gaining ground. Eating has been winning the share of wallet so far. Next year, though, food prices, if those headline numbers do stay relatively calmer, and in particular on fuel costs as well as food, then that does leave a bit more room as the share of wallet to go back into goods, which has been underperforming after those first few early years in COVID where it was really very, very strong.
So the macro is going to help, it sounds like. I mean, even if things are slowing down in terms of growth, rates as well as prices are going to be coming off as well.
That's right. I would think about next year as being, we're still finishing off that tail end of the bungee jump that we talked about a few times before, where we had the collapse of 2020, the surge, the rebound, the very disorientating type of economy that we were stuck with for a while, where you had big swings in inflation, in interest rates, migration flows for certain economies making a difference, excess savings making a difference. And these were very unusual, abnormal types of periods. We're coming out of that now. And we should also see, with a bit calmer inflation and slightly higher wage growth, as long as it's well behaved enough that central banks are calm with it and they believe it's consistent with their inflation objectives, then actually you could even get real wage growth as well next year, which also maybe at least cushioning consumer spending.
David, on the bungee jump, is there some momentum left in post-pandemic, the demand, the revenge spending, pent-up demand, or is that starting to lose some momentum?
Well, in the places that have been open for a lot longer, maybe places, for example, like Australia and New Zealand, there's less of that momentum there compared to in Northeast Asia, where we saw the reopening much more recently. And so they're at the earlier stages, particularly, I would argue, for the travel recovery. If we're only around 55% recovered, for example, for outbound Chinese mainland international tourists, then we have more to go next year, and there's even more of the upside potential that you could see from that travel. Similar thing even with, say, outbound tourists coming, say, from Japan. Everyone has been looking to travel into Japan because of the weak yen. On the flip side of that, less outbound demand. But as we see a turnaround in the US dollar next year as well, that could also maybe help a little bit more, give a bit more momentum to even outbound travelers from there.